All right, we should be all set here. I apologize for the mix-up. All right, so it's time for today's episode of Markets and Mayhem, or Back to the Futures with me, Markets and Mayhem. We had a little bit of mayhem with the sound this morning, as it were. So let me just bring back up our presentation for today. And here we go. So be careful out there with how you're managing your risk, of course. And the folks at Bookmap would love for you to join their Discord. There's a lot of cool stuff going on there, awesome community, and regular educational sessions to teach you more about how Bookmap works. Also, a new class to check out. It's free on their website on the Bookmap Learning Center about supply and demand setups. And a bit about me. I've been trading the markets for about 20 years, really lean more into systematic trading than discretionary. As time goes on, I felt like it made a lot more sense to take the emotion out of trading and turn it into a much more systematic approach driven by data, momentum, order flow, and I even built indicators on top of that to try to improve my results. So that's a little bit about me. And, I started off much more discretionary, kind of gut-driven trading. But as time went on, I felt like it made a lot more sense to lean into letting systems, order flow, momentum really drive my trading, because I noticed that it helped to reduce the amount of noise. It wasn't like I was buying or selling off a headline. It was more I was buying or selling off of a back-tested signal that I had confidence in. And if it worked, that's great. I'd move my stop up into profit, and then I'd have my take profit target. And if it didn't work, I'm on to the next trade. Rather than second guessing, just journal the outcome, come back, revisit it. And it takes a lot of that sort of second guessing of oneself and emotion out of the trade. Now, why do I watch order flow? The big 3 points. I like to watch differentials, or what we call deltas. Deltas are a big part of understanding where there might be aggression on the tape. So in order to know where like buyers or sellers are being aggressive at a particular moment in time, you can look at the delta bubbles or the delta volume bars on Bookmap, and to know where there may have been aggression at a certain price during the session. You can also look at the session volume profile and look at those deltas, and we'll bring that up when I have Bookmap live pretty soon here. Just going to go through a couple quick charts. First, this is actually a little bit dated, so I apologize about that for the title, but there is still a lot of supply overhead here. We do have just a fair amount of volume profile that we're probably going to get caught in and consolidate in, which is good news for the bulls in the sense that it makes it more likely that near-term lows are in. When you get back into this range where we've seen a lot of folks want to trade this market. So that's healthy. We're also above the Ichimoku cloud, and we can see that momentum per MACD histogram is improving as well. So all this looks constructive overall on the daily. And then adding to that, we got some positive CPI data this morning that's also constructive. It shows that there was a little bit of cooling, but overall, the better part of it is there wasn't this unexpected hot CPI because of tariffs or front loading of price increases. Now, in terms of our options market, we're back in positive gamma. That does mean we're less likely to see violent whipsaws intraday in the trade. It does mean the order book is likely to start to thicken up a little bit, especially as we see realized vol roll off on a 90-day basis. So it's going to be important to watch for that as well. If our intraday trading ranges start to shrink, that should also help to bring back liquidity. But for now, we're back in positive gamma. That should at least help to dampen the potential for these chase environment moves where dealers might be buying rips and selling dips. Now it becomes more of the opposite. They're selling rips and buying dips, which is more of a vol or volatility compression mechanism. So that's a good thing. That helps to reduce some of the bumpiness you might experience intraday. And then we do have a lot of call exposure overhead that we should be watching. 5850 and 5900 are big levels to watch as potential resistance. We can see pre-market here, we're just grinding up against that what would be 5850 in SPX and around 5870 in ES. Now let's look at some of the key options visualizer levels. Got the call wall, as I mentioned, at 5900. Key 1 plus, that's the largest level of positive gamma exposure near price, 5850. So those are two big levels overhead to watch for potential resistance. And we'll be wanting to watch the flows as well to see where they're targeting today. They've been extraordinarily helpful. And options flow yesterday was absolutely off the charts. There's over 300,000 calls bought for the top two strikes of SPX. And that's a lot, especially considering we went for weeks where it was a challenge to even get over 100K or 150K. So we're seeing that volume really come back. It was also more than 2-to-1 in the top two calls versus top two puts yesterday, which was one of my big clues that we're going to have a strong day. And I was sharing some of that on social, sharing a lot more detail on our Discord and, of course, with our streams. But I think it's going to be important, again, to watch that flow today, see how it may give us clues, especially as we see rates starting to push up again across the yield curve. Now for today's pivot levels, I'm watching 5871.75 on ES, and on the Nasdaq, I'm watching 20,993. And I'm just going to quickly share that on social as well. So just give me one moment. And that way, if you're following me on Twitter and you want to see these pivot levels for later, you can have them on there as well. And then we do have some awesome exclusive deals to share. If you'd like to get up to 40% off Bookmap, visit traderaid.com/bookmap. That's traderaid.com/bookmap. It'll redirect you to the Bookmap website. Scroll down to the special offers, and you can see those 40% off deals. And if you like what you're seeing on Bookmap, save this for later, and if you want to check it out, you can use this discount for the foreseeable future as it's part of our partnership with Bookmap. So save it for later, check it out, learn more about it today, see if it's the right fit for you. And if you'd like to figure out a little bit more about my work, what we're doing over at TraderAid, where we're building a lot of really cool tools. In fact, just started to release some more tools over the last week. You've probably seen that on my socials. You get up to 20% off traderaid.com using the code Mayhem20 at checkout. So that is going to do it for the presentation. Now we're going to start to dive into Bookmap and talk a little bit more about what we're seeing in the price action today, and really get into some of the nitty gritty and the details of the tape here. So let's bring that up. And of course, if folks have questions or they have chart requests at any time, you're always welcome to reach out, put it in the chat, let me know, and we'll get into it. And I'm just going to really quickly check around to see if there's anything so far. I don't see questions so far. But if you do have any, just let me know anytime. So we're going to take a quick look at S&P through the view of my SPX and dynamic pivots. So we got the visualizer, we got the dynamic pivots on screen. We can see we're challenging that 5871.75 pivot pre-market here. And that's the level that I'm really watching. I think the market's already giving us enough information to tell us this is an important level. So if we can push above this and hold it, especially after the first 20 minutes of trading or so, I'm going to say it's much more likely we get a good move higher, probably retest that CPI high, clean up that poor price structure up there, and maybe have some room higher depending on where the flow is. But you could see also from yesterday's flow, look at that incredible call flow. So we'll see these levels update as we get into the trading day here. But let's dive into Bookmap and take a look at what's going on as we approach the market open, which is just about 7 minutes away. And good morning, folks in the chat. And yeah, we do have a question. So let me just take a look here. It's a question on gold. Ships asks, hi teacher, if you were going to look at GC, would you think that it appears to be a pullback? I was watching it and it was very high, $3,550 an ounce, now $32.75. What are your thoughts on gold? It's a great question. So let's take a quick look-see, shall we? So I do have some charts here. I do have pivots for gold somewhere here. There we go. And yeah, so this is what I'm looking at for the gold chart, Ships. And these are the new pivots that I'm starting to put out for just about all the futures contracts that I watch. So for gold, just on the daily chart, I really need to see it hold 3260.20. I think if we can base there, it's likely we consolidate in this range for a bit between 3260 and 3410. And you can see we've been consolidating in that range more or less for about a month, right? We made that week high, didn't last. In fact, we got a swing sell indicator out of that. Just recently got a swing buy. So we'll see if that holds up. If we plunge below 3260 on a closing basis, it won't. But for now, we're starting to see the potential to maybe revisit the top of that range. I do think we need to contextualize what's going on in gold a bit. And what I mean by that is I look at gold as an uncertainty hedge. And that's really what it was pricing in for the longest time, was a lot of uncertainty. And that uncertainty has resolved to some degree over the last, let's call it, couple of days, really from the talks over the weekend and some of the headlines that came out that were encouraging through the announcement yesterday. Now, this is probably a temporary reprieve because there was no deal. There's a framework to maybe negotiate a deal in a 90-day pause. And if that sounds familiar, it's because it is. We had that Liberation Day where tariffs were reciprocally hiked all over the world, including an island of penguins that no one had heard about. And then less than 24 hours, those tariffs were taken off for everyone but China, essentially. So now we're kind of putting that same type of a reset in, but for China, and we're keeping a 30% tariff on them, apparently. And I think that this has at least given the market reason to breathe a sigh of relief, sell some of that gold down because it was an uncertainty hedge. But I don't think that the upside in gold is completely over yet. I think we can consolidate before we make our next move higher. That's what I'd like to see. And if you recall, prior weeks, I was saying, gosh, I really don't want to see gold keep going higher and higher and higher without taking a breather, because when it does that, it tends to crash. So it's actually really good that we're seeing this corrective price action, because that's exactly what you want to see in an environment where gold got way ahead of itself. And then, there's some kind of catalyst, negative catalyst, that pushes prices lower. In this case, it was some perceived progress on trade. So I think that's what hit gold. I think that's why it sold off a bit over the last several trading days. But I also think the fact that it's likely basing here around that 3260.20 pivot gives us some reason to consider that as a level of support, potentially look for trades back up to that 3410, And, that's where I'd want to take that trade off unless it can break above, at which point I'd put it back on as a swing long. Other side of it is if we break below 3260.20, probably got another about $59, $58 to the downside. And then we've got another major level of support to watch. So overall with gold, uptrend is intact. It's consolidating. We had a bit of turbulence in resetting some of the lopsided long positioning, but this is healthy. And the overall uncertainty catalysts that exist to propel gold higher, I think still exist. So that's my take on gold, but we'll obviously respect the price action. Let me know if that's helpful for you, Ships. And good morning, everyone in the chat. Hope you all are having an awesome start to your week. Happy Taco Tuesday to all those that celebrate. And just plugging into S&P futures here, we can see the grind higher from the European session. Then that positive reaction to CPI. That CPI reaction sold down and now starting to grind higher once again, seeing some resistance at that 5871.75 pivot overhead, which also kind of matches up where a lot of that call flow was targeting yesterday, around SPX 5850. So we're just going to zoom that in a little bit more as we approach the opening bell here. We can see buyers dragging up that point of control as well. Pretty much right to that pivot, just a hair below that pivot I was telling you all about. So should make for an interesting trading session. We are very overbought here, by the way, across multiple different measures, but that doesn't necessarily mean the markets have to go down. It just fattens the left tail if there's a negative catalyst. It's always important to contextualize these things. Overbought can stay overbought for longer than people might think it can stay overbought. And what that means is if the market continues to find reasons to go higher, it's going to keep moving higher. But the more overbought it gets, it's kind of like a rubber band when you stretch it, you eventually have a higher likelihood of snapping back, right? To some degree, you're likely to see some correction or consolidation, and that's healthy. So we'll be watching for that. We'll be seeing if there's any kind of negative catalyst on the horizon. I think one to watch is yields. If we see those particularly 10-year yields crank up above 4.5%, keep moving higher, I think that's something to watch pretty closely, especially with any kind of velocity. You got to think about how much global debt is priced in 10-year notes. Right now this morning, 4.453% on the 10-year. And ahead of the open, just about 20 seconds left. S&P implied to open up 0.09% higher. Nasdaq implied to open about 0.25% higher. Small caps implied to open just over 0.5% higher. And Dow 30 down about 0.4%, with spot VIX at 18.22. And there's that opening bell. You can see some of that volatility coming into that initial candle. You got a lot of flow coming through there. Just like I always like to look at the opening bell as sort of like a crossfire between various big institutional desks. You kind of don't want to get caught in that crossfire unless you have a really good setup and you know exactly what you're doing to trade it. It's usually better to just sit on your hands for a minute, see where the flow settles out, see if we get any kind of signs of trending, see where the options flow starts to come in for the day, before starting to really get aggressive. I know a lot of people get chewed up in this first 5 or 10 minutes, even first 20 minutes. And my thought is always patience pays. If you see the setup, it's going to be there. There's no reason to rush it. And if you're just rushing it for the sake of having skin in the game, you're gambling, you're not trading. You should have a trade setup, you should have your risk and your reward mapped out, and your reward potential should be better than your risk, objectively speaking. That means you're coming up with levels to qualify both of those and a setup that you'll trade, and you'll get out of it like a gentleman or like a polite person if it doesn't work in your favor. I know some folks also will keep moving stops down if it doesn't work, saying, oh, it'll turn around eventually, not wanting to take a loss. Just get out of losers. If it doesn't work, it doesn't work. Focus on your winners. I know a lot of folks that cut their winners too quickly too. It's like the opposite mindset of what you want. Riding your losers and cutting your winners. Turn it the other way. I know it involves a little bit of reprogramming because our egos don't want us to lose. And at the same time, if we're losing a fair amount, especially, we're going to be more likely to just take winners as soon as we get them, nervously trying to capture any green. Turn that on its head. See how that works out for you. And let's just pop right back into the pivots I was showing y'all earlier. You can see it here. 5871.75, again, rejecting that. We've got an outside candle forming here. That means that candle's range is bigger than the prior 5-minute candle. Got a fair amount of selling volume coming in this first 5-minute candle as well. So overall, you know, I'm just watching this and respecting the price action. If we start to break that 5862.75, I think we've got more chance of downside continuation, possibly getting back to about 5850 on ES. But again, let's watch this opening flow here. And let's take a look around some of these other markets and see what's going on. And again, folks, if you have any questions out there, let me know. If you're on the Bookmap Discord, make sure to tag me in, and we'll get to your questions. And this level, this key 2 plus level where the hot call was yesterday, it's just below my pivot level of 5871.75. So we can see some confluence between these levels. Just makes it a little bit more important. If we do see price break above there and build some acceptance, that gives us a higher chance of continuation. What I mean by acceptance is trading above that level. So in this case, trading above 5871.75 for at least a 5-minute candle tells us the market's building some acceptance above that key level. Let's see if it can do that. If it can't and it rejects lower, it's also giving us a different directional sign, right? So right now, we're letting the bigger desks give us a sign as to where they're looking for price to go, where there's demand and supply, and then us, the little fish out there, the minnows swimming in the wake of the big sharks and the whales, we're just trying to capture some of that momentum. That's really the goal. We don't want to try to be smarter in the market. We just want to capture the bulk of the move repeatedly. That's it. It's not about calling tops and bottoms. It's about capturing momentum. You don't have to get the absolute top and bottom every time. In fact, trying to do that will drive you crazy and probably lead you to a lot of bad trades. So we're just chopping around sideways near that pivot. About looking like we're going to challenge it again here. Let's take a look at some of these other futures contracts while we're waiting for the S&P to decide what it wants to do. Got the Nasdaq on screen here. It's looking a little bit more sprightly, making some new highs here off the open. That's encouraging. This is also getting to a level where most of the call focus was yesterday. So we're kind of going back to the scene of the crime, as it were. So this should help to pull ES higher. And we can see on my other screen, I can see it's challenging that 5871.75 pivot once again. We could take a look at some of these mega cap stocks as well. You've got the Nasdaq here. One of the biggest components in it, Apple, starting to make a push. Let's just take a 10-minute chart off that. You can see a bit of a push off the open, now consolidating, lots of supply overhead. In fact, let's turn on that outside liquidity plugin. And you can use this on your copy of Bookmap, show the liquidity and the difference and the visible price levels included. That way you can get a idea of what the depth of book is and whether there's an excess of supply or demand. Today there's a lot of supply overhead on Apple. Something to keep in mind. Starts up around 212, 213, 214, but the big level is 215 with 167,000 shares on offer. We see that as Apple shares are approaching the top of their trading range for this morning. But let's go back really quick here because we do have some interesting price action playing out in ES. We are making that push above the pivot and above key 2. Key 2 plus is the basically, it's the third largest level positive gamma. So we look for that to be a potential resistance level, and it usually has a positive reaction if you can push above it. And indeed we have. We also saw a bit of a stop run some of these shorts being pushed out, 57 stops to the buy side there. So those were some of those short contracts getting pushed out. And if you look at the session volume profile, you can see a little bit of overnight aggressive sell delta here, just below where price is, just below that point of control. So those sellers, and we're naively assuming that some of them were, selling to open contracts, and that's generally a correct assessment. The further away they get from that price, the more pressure they have to cover some of those shorts. So that's likely where at least a chunk of those 57 stops came from. We can also see an offer getting a little thicker overhead around this 58.78 level. It's going to be worth watching that. See if that either allows us to retrench or if we see buyers just blast through it because they have plenty of demand. But so far, I'm at least a little bit more encouraged. I just want to see a little bit more time building acceptance above this pivot, but it's starting to look pretty solid here that we could have some more upside potential. We also have more offers building overhead, and that typically gives you a sense that there's interest in higher prices if you think of the market like an auction. So again, we're watching for price here to stay above that 58.71.75 pivot and the key 2+ level. In doing so, we have a higher chance of continuation to the upside. We just want to see that acceptance built for just a bit longer so the market can give us a sense that it really has some powerful interest up here for continuation of this upside move. And let's check back on the Nasdaq here too. Yeah, it's definitely starting to look pretty bullish on the Nasdaq here. It's going to be interesting to see how we react to that call wall. That's a implied resistance level in the Nasdaq futures based on positioning in the Nasdaq index options. But we can definitely see there is some solid buying interest this morning. You can see that in those delta bubbles as well. The larger these green bubbles are, the more powerful the buy versus sell interest is in that point in time. That is to say, given this thing has an order book depth of about 6,000. It's like 2% of the order book getting stopped out right there. So it's a big deal. Wouldn't call it exhaustive, but I would say folks that were trying to short this thing earlier are definitely getting it handed to them. You can see some of that in the session volume profile from earlier today's trading, the overnight session. Also interesting to see there is a pretty big bid coming in lower on NASDAQ futures here at 20,800. That's 127. And again, given the size of the order book, that's a kind of a chunky bid. So worth watching that. Let's see how the flows develop. And with ES, we got our confirmation and we're continuing to move higher. So we made our break above the 58.71.75 pivot, telling us, and as well as key 2+, telling us this market is building acceptance. It's looking for more upside. We also see those offers overhead growing. So overall, the tape is looking constructive here. It's looking like it wants additional upside. Another buy stop run here on S&P futures 98 contract stopped out to the upside there. And we could see we're actually approaching a pretty important level. I'm just going to pull back into motive wave with my dynamic pivots. And you can see this 58.83 level. This is another big pivot to watch on S&P futures. we could see that when CPI hit, we kissed that level and rejected pretty hard. And I talked about before really the trading day started that I thought we might go up there and clean up some of that poor price structure. It's looking a lot like we're about to do that. So let's watch this price action here. But so far, looking constructive. This is going to be another area to watch closely. And we see a little bit of passive selling coming into the tape for the S&P futures. 179 contracts on that iceberg sale. Also see some of those offers starting to build, and buyers getting a little shy here as we grind into that cloud of offers. That kind of gives you a sense, if you're looking at this from the perspective of auction theory, that at least in that moment in time, they didn't feel like they had the demand to push through. So now we're rejecting and moving lower, crossing below the point of control. And again, we're going to watch that 5871.75 pivot the same way we did on that move higher on this move lower. Didn't quite tag the 5883 pivot overhead, but got pretty close to it before retreating here. Let's also take a look at the Nasdaq. I imagine we're seeing somewhat similar flow there as well. Yeah, actually, wouldn't you know it? Talked about the call wall earlier on the Nasdaq. Pretty much bumped our head right into the call wall and then retreated a bit here. So it is interesting to see how these options levels can continue to impact price discovery in the futures contracts that market makers are going to be hedging that interest in. So we do need to pay attention to these levels. That's one of the reasons I built these options visualization tools that are now available for pretty much every optionable security. It's pretty cool. It's pretty exciting what's going on, but it's also great for us traders to be able to map out these levels in real time, because if you combine the way you can watch the order flow in futures with Bookmap and the order flow and positioning in options with the options visualizer, it's a 1-2 punch. It gives us a bit of an edge. Looks like we're going to come back and challenge that call wall in the Nasdaq futures here. We do see some iceberg selling into strength from the open as well. It's nothing too major, but there was that 122 sale. That was kind of kicking things off. And you can see that subchart indicator here showing that iceberg sales were picking up throughout really the first 10 minutes or so of the session. Let's take a quick look at gold here, shifting gears. Gold under some pressure, which is to be expected. We're trading that range. And let's just take a look at where gold is versus that pivot. So give me 1 sec. I'm just going to go to my notes. Yeah, so 3260 is the pivot on gold. We're trading below 3260 on gold. So I'm not particularly thrilled to see that. It does open up 3201 as the next major level of support. 3260 becomes resistance on gold for now. Let's check back in on the S&P futures. And it's interesting, you see a similar picture as you see in the Nasdaq. There is some iceberg selling off the open. The ratio to book depth isn't quite as high. It's not, quite as much iceberg selling as you saw in the Nasdaq. So maybe there's a greater appetite to take some profits in tech here, or put some hedges on, or even fade it directionally than there is in the S&P. That's what that would kind of suggest. I do like seeing futures holding this point of control here. There was a bit of a look below, but able to bounce right back above. So as long as we're holding that point of control, that's telling us three things. A, we're above where most of the transacting was happening, right? That's the point of control. B, we're still above that pivot. And C, we're still above key 2 plus, right? So that kind of line in the sand, that yellow marker, gives us a sense that buyers still enjoy a technical advantage here, but they also have to show up. One thing they're not doing right now is really giving us much of a sense that they have any conviction to move this higher, at least not at the present time. This is also a very thin book. I have to keep commenting about the low liquidity on ES because it's low. I mean, I've been trading this thing for about 19 years. And over the last, I would say, 3-4 months, liquidity has dried up to a point that is a bit disconcerting. This is 25K order book depth. To give you a sense, the average order book on ES was closer to 50-60K for the longest time. So seeing it come down this much, it increases tail risks in either direction. It basically tells you it takes a lot less to move price, right? So the same amount of volume that might have moved price a tiny bit before can move it quite a lot now, which means that for us as traders, risk management becomes even more important for position sizing. In an environment like this, if I'm going to be trading it, I'm reducing size and I'm widening my stops. That means that I'm more likely to stay in the trades that work and I'm taking less risk for the ones that aren't working overall. Another thing to note about this week, folks, this is options expiration week. And while May options expiration isn't typically anything too exciting, OPEX means you just got a whole lot of rotation of positions going on. Large institutional desks that have to move huge amounts of their books. So in essence, the lines we draw on our chart, the volume profile we look on screen, even some of the key options levels, they do have, I would say, less probability of working as we expect during a week like this. Even more so on triple witching. But monthly OPEX, something to be keeping in mind that some of these tools and indicators and levels that we watch are going to be more wonky. They're going to have a lower probabilistic outcome that comports with our expectations. So it just also, again, means be careful about your trading here, especially in the heavily optioned vehicles like the indices, the futures for those same indices, and the really popular optionable stocks like your Teslas, Nvidias, etc. We're starting to see some flow come in here. We're looking at the SPX Options Visualizer. This is a tool that I created that plugs into Bookmap Cloud Notes. And what it lets you do is view the options flow in SPX converted to ES levels. We've got the same thing going on for the Nasdaq. Then we've got versions of it for SPY, Triple Q, IWM, and TLT, and several other products on the way. But what I like about this a lot is that it lets you visualize the flow and then get a sense as to how the flow may impact price. Right now, calls are outpacing puts. And so we've got about 6,000 call flow versus 4,000 put flow. It's about a 50% excess of calls versus puts. That's constructive. That suggests as long as that kind of a ratio continues, price wants to move higher. So I like seeing that flow. I think it does open up the potential that we could tag that call wall later in today's session. One thing to be very mindful of with this flow is it's not a this is going to happen in the next 2 minutes indicator most of the time. It's more of this is what's more likely to play out during the trading day. So if you expand out your horizon to that, this point we've got 6 hours and 8 minutes and 20 seconds left. You can see there's still a fair amount of time for the market to do price discovery before it eventually can reach that level. So I do think it's going to be important to watch that call flow to see if it stays ahead of the puts. But so far, this initial flow looks very constructive. And let's gauge that versus some of the other flow that we see out there. So we've got products like SPY. We could see the flow going on in SPY here. And SPY is a little bit of a different picture. SPY flow's got that most active put strike as the most active level on its options chain. So retail, who tends to trade SPY options more, and SPX tends to be a little more on the institutional side. Retail's a little bit more, well, they were a little bit more bearish, but now the last update showing us 26,000 in calls versus 22,000 in puts. So now it's a little bit more of a draw in SPY. So it's telling us institutional desks and SPX are a bit more bullish here, and that's something to keep in mind. But we can watch that variance between the flow. And we can also check out QQQ. Let's look at the triple Q. This is another one where the flow is pretty darn bullish. You can see we've already run up above key 1 plus and the hot call level. Now we're starting to run towards that warm call level. And the combination of calls, 18,000 versus puts at 11,000, that's very constructive flow. So you can again see with triple Q, and that's the most popular optionable product for the Nasdaq, there's a lot of bullishness in this one as well. Let's take a look at our friend, the Russell. We've got the same indicator here. We can see calls, 10,000, puts, 9,000, kind of even over there in the small caps. And we know the small caps have not had an easy run right now, overall consolidating. So it looks like most of the bullishness in the options flows in QQQ and SPX. So let's revisit the futures here. We're making that push higher. I'm actually going to pull up the other screen so we can revisit that pivot level that we were watching a little bit earlier. So here we are on ES. We can see that dynamic pivot overhead, the 5885.25. This is a level where I think if you were scalping this move higher, it's a good area to maybe scale back just a little bit, just because we've seen as we get up to this level, sellers are starting to come back in. That doesn't mean later in the day we can't get to that hot call. I think it's becoming more likely as long as that flow stays pretty dominant. But for now, we are looking at a market that could once again kind of retrace. So let's watch how we play this here. For me, the way I would play it is once we get up to that pivot, I would likely exit my position 2/3. That's the core, and keep runners on. And then if we're able to make a push above and build acceptance, I'd put that core back on saying, okay, it looks like the market wants to move higher. But otherwise, I would look to rebuild that core around 5871.75 if we retested it, right? So I'd be kind of looking for us to potentially ping pong here, but I'd respect the price action either way. And either way, our initial break above this 5871.75 pivot we talked about earlier led to some pretty constructive price action and continuation so far. Now we'll pull this back into Bookmap here, and we can see that it's interesting. There is some coalescence here. That 58.85 level has a 214 offer overhead. That's just around where our pivot is as well. So there's multiple sources of information generated by the market that tell us this is an important level. And there we go. We see buyers taking out that supply overhead, but pulling back a little bit. Nice, strong little buy delta candle as well. So with these offers and these bids, what's really important isn't just that they exist, but how price reacts. Right now, you got a reaction that kind of gives you a sense that buyers were a little timid on that first attempt. Let's see if they make another attempt to push through some more of that supply overhead and build some acceptance above this 58.85.25 pivot. But you could see why it might be a little bit adverse on that first go. Now we're starting to make a more determined push. So the next step for me and the way that I like to trade this is I'd like to see this build acceptance above that 58.85.50 pivot. Then I'd want to put my core back on, because that tells me the market likely has some more room to run higher. And momentum definitely favors buyers here. We're above the BGL. We've got constructive flow. So I'm just playing it a little safe given some of the conditions in the market. But at this point, I'm looking at this and saying, I think we could still continue to move higher. I'm going to give it until 10 a.m. to show that we built enough acceptance above that 58.85.50 candle, that 5-minute candle on the pivot. And if we have, then I'm going to be looking to put that core back on as well. You can also see there's a reasonable offer overhead at 58.90, about 230, 240 contracts. And we can see some of those offers building at higher levels as well. That's constructive. That's what you want to see. Some folks get a little scared saying, oh, the order book's got a lot more supply coming in. It's contextual. You got to see how price reacts to it. And if the trend favors where those offers are coming in, they typically are just levels that become a little bit more magnetic. Folks are wanting to transact there, and the price is trying to release that liquidity. And folks, I hope you've enjoyed this stream. If you want to learn more about my work, visit traderaid.com. You can get up to 20% off using the code Mayhem20 at checkout for your first billing cycle. And if you'd like to check out Bookmap, if you like what you're seeing here and all the cool tools and the way that it visualizes the market like no other chart software, visit traderaid.com/bookmap. Scroll down to the special offers. That's traderaid.com/bookmap, and you can get up to 40% off. And I'm here every Tuesday at 9 a.m. Eastern with the Back to the Future show. So be sure to set a calendar entry. I'll put the links out there. It's also announced on the Bookmap YouTube under their live section just before we go live. And of course, it's always on their Discord. And I shared some details earlier about how you can join. And we're just going to quickly go to Motive Wave, and then we'll be closing things out here. So we're just looking at the price chart here. We're getting closer to 10 a.m. Looks like we're building acceptance above this 5885.50 pivot. If we do, it looks like we've got some room for continuation there. And then we're also just going to add to it a little bit of nuance. The flow is looking a little bit more balanced now. It's 11,000 versus 8,000 calls versus puts. So it's a little bit less bullish. It promotes a little bit more chop, but it's still bullish, right? It's 8,000 versus 11,000. I'd like it to be a greater variance. I'd like to see the calls 12, 13,000 or more, but it's still constructive flow overall. It just promotes a little bit more sideways consolidation as we move higher. If that flow variance gets greater, if the calls are outpacing the puts by 50% or more, it becomes much more likely that it's a little bit more magnetic, right? So overall, looking at this market saying it looks like it wants to continue moving higher. We've built acceptance above that key pivot level now that we're approaching the 10 a.m. Close of that 5-minute candle and coming up on the new candle. And it looks like there's a pretty good chance that as we get into the closing bell, at least one of these two call strikes will get hit. I think it's likely we try to tag that call wall again, which is going to bring us to SPX 5900. So thank you for tuning in, everyone, to this episode of Back to the Futures with me, Markets and Mayhem. Really appreciate it. And I hope you all have an awesome trading week ahead. I'll catch you next time.